I heard that was it either Impossible Burger or Beyond Meat. One of their stock is down big time, so we got to support them if we want them to survive.
Oh, it's not good. Oh, who's my stock?
You ask me this like 10 times a year, and then even when the year's over, you still forget it.
I know.
Amgen.
Amgen. How we doing, Amgen? It's because I mean, look, I'm a big stock picker and I really pay attention to all that.
You can't say on last episode you don't care about your stock, and then this episode say you care now about your stock.
No, I care a lot. It's only 63 basis points off all-time highs. All right, let's get going because I'm ready. I'm ready to chop it up. Welcome to Talk Your Chart, episode 77, recording on March 3rd, 2026. Here at Talk Your Chart, you can expect headlines to meet data and perspective. I am Marco Segrera, here with Brett Horowitz, and today we're breaking down headlines and market narratives. You know what? I'm going to go first because it's the unavoidable. It's good that they do wartime things over the weekend so people have a chance to digest it. On March 3rd, I think markets are down, and they're down so much that we are, what, 4% off of all-time highs in the market. So this first chart here, and really the first two that I pulled up, are just simply kind of framing S&P after major geopolitical events. And then that second chart is just kind of showing you the S&P, the price index, the pullbacks that kind of come to pass, but then ultimately it's like, what are you going to do? These are obvious buying opportunities in the market. The problem is that everybody knows that, which perhaps diminishes the magnitude of these opportunities. I'm going to read this just because I wasn't terribly versed on what Iran does after a supreme leader dies. On February 28th, Iran activated a constitutional transition mechanism known as the Interim Leadership Council. They represent the political, judicial, and clerical power centers and must nominate a new supreme leader. I believe they were bombed during that meeting. The new chosen one had better be ready to follow the commands of the White House or meet the same fate as his predecessor. Iran's foreign minister admitted the country's attacks on neighboring countries are literally out of control. Soldiers in the field have no command structure and were just following the last orders they received before their top commanders died. So America is going into Venezuela, going into Iran, and perhaps just telling China, heads up, we're not going to let you take over those geographies. Thoughts?
So I had a client email me last night, and she said, "Hold my hand, tell me not to worry." And so I wrote back a quick little paragraph and said, started off by saying, first of all, what's the big deal? Obviously, it is a big deal if you live over there, if you know someone that's affected, if you know somebody in one of the neighboring countries or somebody over here that's gone to fight over there. But from an economic standpoint, at this point, it's not a very big deal because while there are people who are panicking and there are people that are selling and there are people that are hearing the headlines and are worried about the price of oil and what it could do to inflation and what it could do to this and this and that, all of this is speculation, and this has to go on a lot longer and be a lot more involved for these things to really impact us long term. I'm not changing what I'm doing this weekend. Most of us are still paying our mortgages. We're still going out to eat. We're buying stuff for our kids. I mean, life continues on, unfortunately, as bad as the war is over there. So at this point, it's not nothing big unless it becomes longer and longer and has bigger impact.
Yeah, it's long. If it gets long, that's where the risk comes in, and it's all price of oil backed. Just because if costs come up, then that eats into profits. Earnings are the most important factor, and then obviously earnings impact people staying employed. So I heard Trump say this kind of 5 to 6 week thing. I'm surprised he even put a marker on it. Mr. Rubio avoided saying how long he thinks it will or won't be. But yes, the longer this sticks around, the more it can impact the price of oil. That's kind of that's the bad thing that could happen. If you get costs rising, you get inflation prints that nobody likes, and then you get businesses who have to deal with uncertainty, which they don't like. Similar to I think what you kind of saw in April of last year with the tariff turmoil stuff. Businesses didn't know exactly what to do or how to handle it. So that uncertainty gets priced in. It obviously got priced in pretty quickly, but then reverberated on the exact opposite end. So I think historically here it's obvious. It's just always bad when there's human toil and pain in these things, but these are generally always buying opportunities that come through pretty quickly.
This is the cost of volatility we will gladly pay in order to get our 10% per year. And to be a stock investor, you've got to unfortunately be in those things. I'm going to not check my Schwab account when I get home this night, assuming the market's down. and I'll wait for it to come back up and then check and be pleasantly surprised as it bounces back. So we tell our clients we're going to lean into volatility, right? We're going to not panic. We're going to stay very sound and try to make rational decisions. And if someone wants to sell at a very bad price, we'll buy, right?
Yeah, what I would tell you is the kind of secular play on a perhaps roaring 20s scenario, right, into 2020s instead of the 1920s, is I still think oil and infrastructure could very well be buying opportunities in this moment in time for the next 10 years just because of the secular trends that we are seeing in infrastructure everywhere in developed nations. So I think the opportunity to own energy and oil in some capacity, to own industrials in some capacity, to own infrastructure in some capacity, I think that's still a decades-long play, and it's something that we talk about on the investment committee.
There's plenty of those stocks in the S&P 500.
Of course there are Horowitz, but there's sector ETFs too.
Stay away from that.
Can I talk to you for a second? Come on.
From the guy that had the worst performing stock in all of the world a couple years ago?
But wait a second. Who's picked the winner the majority of the time?
I don't know if we have those stats handy. We need to have somebody that can get those stats handy right when we ask for them.
Don't compare to stock picking. By the way, I had a conversation yesterday with a prospective client. He's like, look, man, I like to manage my own money. Over the past 3 years, I've averaged about 20% per year. And I'm like, you keep doing that, brother. You go to town. I like your chart next before I talk about CapEx. You want to do real market capitalization?
Yeah, okay. Well, we had one very similar to this recently. And so here are 4 different charts basically talking about how the market cap of companies versus the number of employees they have and sort of household disposable income, profits and labor compensation, and then the profit margin. So here's a couple of stats to follow up the charts that we have on here. NVIDIA is 20 times as valuable and 5 times as profitable as IBM was back in the day, adjusted for inflation. Yet it employs roughly a tenth as many people. In 1980, 2/3 of value added in factories went to labor as wages and benefits. By the 2000s, that was down to 45%. So a lot of people obviously got a lot of good jobs, got some cheap products out of it. But recently, we've had a lot of companies who've been able to make a lot of money without hiring. Apple's revenue has grown by 43% in the last 3 years, while headcount has remained flat. And since 2019, total compensation is up 8% for technology companies, whereas profits are up 43%.
Is this just going to be exacerbated by the white collar folks losing all of their jobs because of AI?
No, they're not going to lose all their jobs. We've always worried about that. It's not going to happen. Don't tell me you're predicting that to happen.
No, not at all. That's, again, overestimating what stuff does in the short term.
This is why the stock market is up, right? Profits are up. Labor compensation is down. It makes sense to me.
No, it does, but here's what's even more awesome. Since November, October of last year, NVIDIA, Apple, Alphabet, Microsoft, all those companies have kind of not done well, right? Their stocks have underperformed. So the concentration has come down. Market's still kind of holding its own, which is wonderful. And it kind of speaks to, is it over the next 10 years, you get the refraction of what happened over the previous 10 to 15 years, where instead of the asset light companies doing well, you get the asset heavier companies and the, again, infrastructure plays as opposed to just these SaaS businesses that are being repriced materially. So I think it's interesting that this chart's putting up what is underperformed and then what is kind of the old economy perhaps outperformed, like Exxon, for example.
Yeah, but I mean, I don't think you want to bet against these companies. Their profits are incredible. Every quarter, you keep thinking they're not going to be able to keep pace with what the experts are predicting, and they continue to do so.
No, I don't disagree with you. But what if people are just not willing to pay as much for $1 of earnings, right? So if their PEs come down, and the earnings stay the same, but the market says, you know what? I'm less certain about these cash flows in the future, so instead of paying 25x, I'm only willing to pay 22x, then you still get a meaningful re-rating.
Oh, yeah.
And the top 10 of the S&P 500 changes about 50% every 10 years or so, right? So someone's not going to be up there, and it may not mean that they're out of business, right? It just means that someone had the opportunity to outperform. I'm going to do this chart next, which I think plays well. So It's the one that says Apple on CapEx. I did not appreciate this, and this is what was kind of a shocking chart to me that Andreessen Horowitz put together. Did you appreciate that the CapEx that Apple is putting into this AI infrastructure build is functionally non-existent?
Yeah, I've seen this. I have some things to talk about.
This was shocking and awesome. And then I think what this says, and I wish this was better resolution, but it's as good as I could find. This just speaks to the power of access to the consumer, right? They're basically saying the LLM, this doesn't matter, and whoever wins or whoever the couple winners, they're gonna need me anyway because I have access to all the eyeballs. So I think this is Apple just saying we won the big game, so you guys are gonna have to come to us anyway because we're the gatekeepers.
Well, on the opposite side, interestingly enough, see Microsoft, Meta, Google, Amazon, and Oracle plan to spend more than $700 billion in 2026 on cap spending. That is close to the 2020-26 spending budget for Japan and exceeds those of Germany and Mexico. It's huge numbers that some are spending on, but like we talked about before, their stocks are getting punished a little bit because they're spending so much. Whereas Apple might be the smart one here, not spending as much.
Well, I think again, I don't know if Apple's a smart one. I think they're the only one that can make this bet. They're all those companies have basically said that the risk is to underspend, not overspend, right?
Oh yeah, they're chasing everything.
Yeah. So, and again, that's fine, and that's unlike the dark fiber supposedly from the tech bubble in the early 2000s. Apparently, every time a little GPU goes online, it's immediately at capacity. So, I guess that's good, right? That we don't have the tail risk that was more apparent during the dot-com bubble.
Yeah, I mean, I don't. Depends. I mean, either they're going to be really smart or they're going to be really stupid after they see all these other companies do really really well.
Yeah, I don't know. We need more energy, man. China produces so much more energy than we do. It's incredible.
We've heard this before.
But it's unavoidable, man. It's unavoidable. They put on as much capacity as we have in total. They put that online like every 12 months or something ridiculous like that.
Well, you know what they also do? They continue to export goods into our country.
Yes, they do.
So last year, 2025, after all this craziness with tariffs and how we were going to reduce the trade deficit and we weren't going to buy as much stuff from them, we had a record trade deficit, $1.24 trillion in 2025. There were a surge of imports at some point earlier in the year. Then that reversed itself as tariffs got rolled back and businesses got exceptions. The gap between imports and exports in both goods and services was $901 billion last year, just slightly smaller than the $903 billion deficit recorded in 2024 for goods and services. So with all this is being done, did it really impact anything?
Yeah, it does feel a little bit like a dud.
You talk to people who are in certain industries and it was like, what a year it has been. We've got to redo everything, where we manufacture stuff from, and I was reading about today that you can actually get the import applied to not just the price you're selling it for, but the price you bought it for if you're like a middleman. Like you can go back to the original person that bought it or made it and use a tariff on that. Like there's so many workarounds that are affecting a lot of companies. But at the end, when you add everything up, it didn't seem like it had much of an impact.
Yeah, it had such a big revenue impact that I don't know. Again, that's only one side of the equation, but gosh, the revenue went through the roof, and then it didn't seem to make much of a gap on the other side. I don't know how much a trade deficit matters, Brett. Like, how much does a trade deficit really matter?
Well, it matters in that there's a lot of money being moved over to China.
But the
But
foreign direct investment, like right now, and I don't know if I'm gonna be able to find it, but international folks, and not just like you and me, for example, but large investment houses outside of the US are just pushing chips into public US equities and then also doing what's kind of usually called this foreign direct investment. So that stuff is happening, and that's not part of of trade deficit calculations.
Yes or no, we have to refund all of the tariff money.
No, they already. So basically, in I think it was Kavanaugh's decision, which by the way I think was 70 pages. I wonder if he used AI. He basically gives the administration the ways to do the thing without it being an abuse of powers or an overreach. So it doesn't seem like, especially because, gosh, who knows how convoluted it is to get your money back. But it doesn't seem like they're going to be automatically reversed. And he basically put on, I think it's now like a 150-day window with this 15% that he's allowed to put on that gives them time to then use these other, I have no idea what the exact rules are, but it's like code 338 or something under tariff code 330, all those things.
Yeah, specific countries.
Yeah, exactly. So I'm not sure what that's going to look like, but I do think it's an overstatement to say all the tariff revenue is going back. And then here's another question. Everybody, how many economists and how many people were just sounding the alarm on tariffs, the worst, everything is terrible, inflation, all this stuff? Is it too soon to say that that was obviously wrong?
A lot of companies waited until January 1st to increase prices, so we'll have to see. But yeah, I think that's just media trying to scare us. What the government should do is put all the refunds on a gift card like the government would do with personal taxpayers. Send the refunds back, boom, easy done.
That's so good. A refund. That'd be wonderful. All right, man. Last chart. Complete pivot. What's the most important resource? What's the most important asset, Horowitz?
My health.
Okay, fine. That's a good answer. You could also say attention. Attention's a good answer too. But today, this one, I saw like a version of this chart, and it got me. Again, you have parents, you have animals, you have people you love. So when I saw this, and then specifically I was thinking about my kid, as our listener well knows, I have this funny spread of a 19-year-old, a 6 and a 4-year-old. And man, the time that I spend with my 19-year-old has fallen off a cliff for the obvious reason that he's away in college. And that just made me a little bit more aware of the time spent with the 6 and the 4-year-old, because you just can't, it's so easy to take for granted. And then this chart just kind of punches you in the face with, well, look at the time spent alone. Isn't that terrible?
Yeah, way to end us on a downer.
Hey, just enjoy your time. Listener, you'll never be younger than you are today, so take the trip, do the thing, eat the steak, but also go to Pilates.
Drink a beer.
Yeah, maybe with 0% alcohol. I had one of those this weekend. It wasn't great. So what are you going to do differently now, Brett? How has this reframed your perspective?
Look, I just spent 36 minutes with Marcos. That's not on this coworkers. It says I should be spending, let's see, purple, in my mid 40s, under 100 minutes. What is this, per year?
Yeah, I don't know. That's minutes per day. Yeah.
Under 100 minutes per day with you. So we still have some time left, Marcos. What are you doing for the next hour and a half?
Yeah. Hold on, but the coworkers. I never really looked at the coworkers. No, the coworkers is the bottom line, dude. So it goes higher. It's above 100 minutes, but below 200 minutes.
Yeah, so I'm saying we've only had 36 minutes together. We got another hour and a half together.
Yeah, exactly. It's over 100.
I'm going to come in your next meeting. Is that okay?
Yeah, I would love to have you. It's been a minute, man. We deserve a meeting together.
How about we just cancel all our meetings to spend time together?
You know how wonderful that'd be? How many meetings do you have today? I have like 5 meetings, man. Oh, man.
Well, maybe we should cancel some of them because time with coworkers is not high enough with you.
Why do you all work so hard to be able to control your time and who you spend it with?
And let's apologize to the Supreme Court justices who do not use AI to write their opinion pieces. If you're watching, continue to watch. Marcos is sorry for his comment.
Yeah, Kevin, I know those are your 70 pages. It was probably double spaced, though, so it really was probably like...
Why do you think it takes so long to make a decision?
I know, thoughtful. Hey, but you know what, last thing? I love the fact that everyone's, hey, Trump packed the court here, it's all Republican people, and he didn't get the decision he wanted. I think the forefathers would be happy with this process. We got a little bit of a... Yeah.
Yeah, sure. So the outcome worked out. So if you decided not to read a recipe book and you put a bunch of things together haphazardly and the product came out good, you're saying you should keep doing that.
I'm being very specific with the tariff thingy and the Supreme Court in this very specific case. I did not tune in to anything any more than the first 10 minutes of the State of the Union.
Hey, you got me 10 minutes more than me. I got none of it. But if I was president, first order business, there'd be no clapping during any of my speeches. I would I would save the American public a good 40 minutes of clapping.
Yeah, I know. It was the longest State of the Union since they started recording that.
Vote for me. No clapping or State of Unions ever again.
All right, we leave it there. Brett Horowitz, you have my vote, my friend. I salute you.
Makes sense.
Until next
Have a
time.
good one.